It's the Teller Drawer. Real talk, real money, real people.
Credit unions were started by communities.
The standpoint of just being a credit union, it's kind of our job to go beyond.
Listening to the community. What are the needs?
CSE can come in and they can do financial literacy.
They're going to get that balance. They're going to get that purchase amount.
If you reach out to us, we'll help you.
The big myth is that it's always banks beat credit union.
It takes a lot of A's to get to a D, to get to a B.
Welcome back, everybody, to another episode of the podcast, whether you're listening to this or watching this video podcast. My name is Lucas Tyndall. Excited to be here with you again with my good friend Tim from CSE Federal Credit Union. Tim, what's going on? You're back.
We're back.
And you have a guest with you here today.
We've got a guest. Yeah, we're here today with Justin Frazier, our community outreach coordinator, but also maybe for this episode specifically, more importantly, our certified financial counselor who helps people navigate torrential financial storms.
Torrential.
And maybe they're not even torrential. Maybe
it could be, though.
Could be a slight rain.
Could be a sprinkle. Could be torrential downpour.
Right. But Justin is great helping people, and especially our members, manage money, understand finances, get from point A to point B, set goals, measure all the things. But today, specifically, we're going to talk about credit score, what goes into your credit report, how you can monitor that, what you should care about, all things credit. So Justin is great with that, teaches people about this stuff all the time. And it's a fun topic to talk about. It's a thing that people are genuinely curious about. Yeah. And
generally don't necessarily know a ton about.
For sure. Yeah.
Genuinely curious, but don't always know.
Maybe think they do, and maybe they don't know. They think they know.
Yeah.
So
I think this is a great topic for anybody listening anywhere, whether you're in this local community and you're a member or curious about being a member. We'd love for you to check out CSE Federal Credit Union, or anywhere around the country. You know, the rules apply about credit. And again, it's something that some people may know a lot about. Some people may know a little about. Some may be a little confused. Yeah. I think for myself, I'm excited to ask some questions because growing up, it wasn't something that I knew anything about. Like, I was not raised in a house where we talked much about finances. We didn't have a lot of finances, so maybe it was because there wasn't much to talk about. But as I became an adult, I bought a house at a young age, but I just knew enough to know that I could get it. And then, some things went there. I went through a divorce, and then that was kind of a tricky situation. It had some impacts on my credit because of some things that were how that went through. And then, did some recovering from that. And then some other things happened, lost a job, and, things of life happens, you know what I mean? And you go through those ups and downs, and you're just always like trying to prove your worthiness, credit worthiness. Yeah, right. And I think sometimes it can be a scary game, I would say personally, and it can be emotional even. Yeah. Where you're like, am I worthy to do something such as buy a home? Yes. Which is something so foundational in our country, something that we almost see as a right or a part of the dream.
Absolutely. I was going to say the American dream is alive and well, but credit is a big part of that.
Yeah.
So, and responsible spending, responsible saving, responsible paying of bills. All of those things are part of credit.
Yeah.
And there's a lot that goes into it.
Yeah.
But we're going to keep it higher level today.
Yeah.
We're not going to get into the
40%
fix
people's credit
perfect or 30 of that.
The special algorithm.
Okay, nothing like that. All right.
Things that are way above even our credit. But no, I guess we'll start with the basic. And Justin, I'll just ask you this question. What is a credit score?
A credit score, simply put, is what I like to call your adult report card. It's your financial report card for financial institutes to understand what your history was like. How did you pay people? Traditionally it's a 3-score model, and it usually ranges from the lowest being about 300 to the highest being about 850. Now, everyone thinks you need to make it to that 850 to have A credit, to be able to go anywhere to get whatever you want. Well, that's true, but we don't see a lot of 850s. I can speak for myself at the credit union. You just want to have what I call excellent credit. And excellent credit is anything above 720. If you're at that 720 or above, you're going to get your best rates. And when we talk about rates, we're talking about interest rates. We're talking about approvals. The reason why credit is so important is because it influences a lot of things. It influences whether you're an entrepreneur. When you first start off a company, you need your credit worthiness to kind of start that company off,
Yeah.
to get that credit
Unless you
line.
hit the lottery or something.
Yeah.
So it influences a lot more than people think. When you go rent your first apartment,
Yeah.
you might not think about it, but you may get a credit pull
Check. Yeah.
because they want to make sure that they can trust you with that apartment. And traditionally, someone with a higher credit score is going to be more trustworthy.
Yep.
So it goes to different dynamics with that credit score, but a credit score was there to kind of give people their financial report card in
Yeah.
a sense.
And to your point, it impacts a lot of other things as well. Insurance, whether you qualify for insurance, getting jobs.
Yeah.
Jobs to work at the credit union. They'll pull your credit report and background checks and all kind of other things to make sure that we can insure you. But if you're terrible with your money, we probably don't want to trust you with ours.
Yes.
So yeah, it certainly impacts a lot of other stuff. So what are some of the issues or items that credit scores look at? What are those impact points?
Well, first let me start with this. I think a lot of times what I see is people overcomplicate credit. They overcomplicate it. A lot of times what credit models are looking for simply is that payment history. Do you pay on time?
Right? Simple as that.
Simple as that.
Okay.
A lot of people, they come in and we talk about finances and we're doing credit enhancement and they're looking for this special algorithm, but finances are more in the behaviors than it ever is in the numbers.
Right.
And it's as simple as making sure you don't miss a payment. And we're going to talk about some ways to ensure that you don't miss a payment and to I always say when you were in school, you used to study for the test. Right? Yeah. So you need to make sure that you set up your bills for your credit report. So that way you can always make sure you're succeeding. Yeah. So the one thing that they're looking for is your payment history. Yeah. Making sure that you're paying those bills on time. And we'll talk a little bit about when you get a credit pull, you want to see ones on there. Ones are good. Yeah. And I'll talk a little bit later about what ones are versus the twos and then the threes. You don't want no threes on there. Okay. But payment history is the first. Then the second is capacity. A lot of people go, capacity? What do you mean by that? Well, a lot of times I'll see people have good payment history, but their credit score won't go up. Well, that's because their credit cards are maxed out. So when we talk about capacity, for simple math, if you have $1,000 credit line, you want to make sure it's under 35%. So you want that at $350 or less. So, if you have a $10,000 credit line, you want that at $3,500 or less. So that's a big important piece because that lets the credit algorithm or whoever's putting those scores out there know that although you have that line, you're not hurting so much that you need to max it out. Right. You still got some money out there. Right. So, yeah.
We sound like we're talking about people who have the resources to pay, who just are forgetting to pay their bills. Okay, Justin? That sounds nice, okay? Or they just went partying and they accidentally spent their money on too many drinks and they didn't pay their bills, Justin. Okay, forget that, okay? Let's talk about the person who has all the best intentions and then their child gets sick. Yeah. And then those medical bills start to rack up and they had to pay a bunch of copays and they didn't, because the doctor couldn't figure out what was going on. And they had to keep going back and they had to pay that copay. And then they got behind or something went wrong with their car and they had to get it fixed. And then they couldn't pay that bill. And so that bill got behind. And then they just got into that cycle where now I'm a month behind. So I'm always behind and then it's always hitting my credit and it always looks bad. And it's always like, what do we do in those situations? What does a person do?
That's good.
For that situation? Because I don't think most people, I don't think anybody intends to get in a bad spot. What do you tell people who get in those bad situations?
So you encounter a hardship or a financial hurdle. And what I like to tell people is you try to be as proactive as possible instead of reactive. It's definitely making sure that, you're putting that pen to paper, finding room in your budget. And if that doesn't work, getting on that phone and communicating with the creditors, communicating with your financial institute. Sometimes you may be able to go down to CSC Federal Credit Union and say, look, I need a bridge loan. I need about $500 to get me through next month till I can recoup that money so that I don't miss a payment and my score doesn't drop. So it's all about that communication. That's big. And putting that pen to paper.
And I love that you said that because I would say, when I went through financial hardships, what I did was buried my head in the sand. I was so embarrassed that I was going through it that instead of being proactive, and this is what I saw my parents do, don't answer the phone. Don't tell them I'm home. Right. So then generationally, that's what I was taught. You hide from creditors. You don't proactively go to it. That sounds crazy. They're going to get you. Right. And then I heard things later in life about, and this is really crazy stuff about, you know, like every time they get a hold of you, it restarts the clock for some nonsense about you owing. And if it goes so long, then they'll just write it off and all this craziness. Like there's a lot of, and maybe that's true or false, whatever, whether it's misinformation or not. I think there's a lot of things out there where people we're afraid of creditors. They are loan sharks. I mean, literally, I think that's what a lot of us have been taught.
Mob boss is going to show up at your door with the baseball bat, you know.
Like who are these people?
Give me my money.
And I'll be thinking, and a lot of times I'm thinking like, you got bills too, person on the other end. You just work there. Like this is not your money, you know, like.
And when you think about it, money's one of those issues that is very personal. And it's very, so first off, I take my job very serious. And when someone comes in, I'm all ears. Because I need to understand we're building a rapport. And what I find is most people are going through life with blinders. They got these blinders on. And the craziest part is the anxiety of owing causes them to spend more money. So they spend out of the fear of not having. So you find that more people get further down that rabbit hole because they don't want to know. And they tend to spend more and they go on these shopping sprees and impulse buying. You go into a store and before you know it, you're further down that rabbit hole and you don't want to look.
Fascinating.
You don't want to look because
it's like numbing the pain, sort of. Interesting.
And it's the most beautiful thing when you finally sit down and you look at it and you tell them it's not as bad as you think. And my famous line, how to eat an elephant? One bite at a time, meaning that it may be big, but we're going to take it one step at a time. And people walk out the office like you just gave them wings. You know,
they're like, I can make it.
I'm a little drained because we done went through some stuff, but they're going to sleep that much better. So credit is one of those things where you have to take time, be gracious with yourself, and just start doing the right thing. So making those payments on time, communicating when you're in those hardships.
And with that, being patient. Because changes to credit, kind of like in school, back to the adult report card. You could have all A's and then you flunk that one exam. All of a sudden your grade comes down to a C or a D. If you're coming from that C or a D or an F and you're trying to get to the A, it takes a lot of A's to get to a D, to get to a B. So you got to have the commitment to it. You got to take the time and be patient with it, but you also got to learn what the right things to do are. And that's where Justin comes in. So
that's great.
Let's talk about the impact having good credit versus bad credit. Kind of shift gears a little bit. What are the impact? You know, if I have good credit and I come to the credit union and I'm getting a car loan versus the same exact situation, I'm coming to the car loan or the credit union for a car loan with bad credit. Let's just say hypothetically we approve both those loans. Show us the difference in payments and obviously we're not talking in real numbers here, but generalities.
I can tell you this, you know, I read a study somewhere and I think it was through one of the credit monitoring apps, but someone with good credit versus someone with excellent credit will spend about $60,000 more just having from good
in their life.
From good, over a lifetime.
In interest.
In interest.
Like all things the same.
Right.
Just finance charges.
From good to excellent. You're not talking poor to excellent.
No,
you're talking good to excellent.
Wow. Wait till you hear this number. When we talk from poor to excellent credit, it's predicted or approximate $200,000 over a lifetime.
And the crazy thing is the person with the poor credit score can't afford that.
Yeah, and that's
right.
Say it again for the people.
I mean, they cannot possibly. I mean, maybe they could. I mean, nobody. I mean, in theory, they could have been just a person who has money and was irresponsible. But in theory, they also could have been someone who does not have means, fell behind, and did not have education, and fell behind. And then because of that, they started in this hole of this high interest rate, paid for a car at a really high interest rate, paid way more for the car, and that always kept them kind of in this spot. of
And that's why when
Not being able to-
you know, I always tell people you can't compare yourself with others because you don't know what you don't know. So
Yeah.
if someone comes in with excellent credit and maybe they get the same exact car as you, that car is $50,000, their payment could be $200 less than what you're paying because their credit is good.
that's deep.
So when you
That's a
think
lot.
about that, I always tell people you have to live in your financial truth.
That's great.
You have to understand where you are right now.
Yeah.
And that's the best thing you can do. You have to just understand right now, this is what I can afford.
Mm-hmm.
But when your credit gets to a better or more excellent score, so 720 and above, you can afford more.
Yeah.
That doesn't mean you want to go out there and spend it up, but
It's
it
time to
gives
do-
you a tool to leverage.
Yeah.
And I always say, you know, the reason why you want to consider credit as a tool is because it's there for you to use as a resource. For an example, you know, your furnace goes out in the house. Maybe it's $2,000. Well, a lot of times people don't have that cash flow just to pay $2,000 out of pocket. But if you have good credit, you can go to Lowe's, Home Depot, and use it as a tool.
Yeah.
Same as cash normally,
Yep.
6 to 12 months. And you can take that $2,000 and now you're paying it over
it out
12
over-
months
Yep.
with no interest.
Yep.
So that's why there's benefits
That's good.
to
That's the
having that good
impact.
credit. That's
Yes.
the impact versus someone that has poor credit
Yep.
that now has to go to maybe a fringe financial service like
Yeah.
a check in the cash or somewhere where they're going to charge you
To be
20 to
predatory.
30%
Yeah.
interest. So that $2,000 furnace might cost you $4,000-$5,000
Which is
over that.
insane.
So yeah.
Which is, it's interesting because I have some feelings about, sometimes there's areas that have less education about it. And I sometimes feel like, man, we had such a disadvantage not knowing. And not knowing just perpetually hurts those that don't know, because then you keep generationally passing on bad habits, and then it just keeps causing that. But I also think historically, though, also this credit system, while we have smart algorithms say now, was always a thing. If you lived in a city or a society in a marketplace, there were people who were trustworthy. And they were like, Johnny over there is trustworthy. I loaned him something. I loaned him 3 eggs and he paid me back with whatever the currency was at the time. And you can trust him. And he had a good name in his market, in his community, right? And he had a good name. That's what credit is, a good name amongst those you live with. That's what it is.
Exactly. You know, you think about even in our family, we all have credit in our
You're
family.
right.
There's
You're
some
right.
family members, you know, that are
You
going to
don't-
pay you right back. They have good
I
credit.
tell my kids that all the time.
Then there's some that
tell
come
my
with
kids that.
stipulations.
I tell my kids that when I loan my kids money, I say, you can have it because you have good credit with me. Those my kids that pay me money, they all do. But I'm like, you have a good. I'm like, you can ask me for anything. You have good credit with me. No problem. You can ask me. They're like, Dad, I hate to come to you. I'm like, don't feel bad. You have great credit. They always pay back. They always pay it back. Like they were great at it. So I wanted them to learn that lesson that I didn't have. And I'm like, that's how it works. That's good credit.
It's a larger scale now.
Credit as the root word, credibility.
Yes.
Like
Yes.
having good credibility is something we all aspire
Yes.
to have. You don't want
In
somebody
so
to
many
be
ways in
right.
life.
And I think it's important too to understand that credit and your credit score is not indicative of wealth.
Yeah.
You could be Jeff Bezos and the richest man in the world. I don't know who's actually the richest. I think it's
I don't know.
Elon Musk. I think so. I think it is
Well,
Elon
you
at this point.
could you could have all the money in the world and have terrible
That's
credit.
fascinating.
But you could also live on Social Security and have an 800 credit.
That's an interesting
It's
point.
all about responsibility and understanding how
Yes.
it all works. Paying your bills on time. That is first and foremost. But then just being responsible and credible with your money. So
And you know, we're going to talk about a few of those things that people don't quite understand that they need to know.
Yeah.
Like, don't get mad at a credit card company and close the card because you could be hurting yourself. You think you
Interesting.
hurting them.
Well, tell us about it. What do you mean? What's that about?
I call this the polishing of the credit. You know, after you do the payment history, you do capacity.
get the foundation.
Yeah, now you're starting to polish that credit. You're trying to get to that 800 score. Length of credit history is one. So that's going to account for about 15% of your credit. So you don't want to get mad at a credit card company and close. All you did is hurt yourself because you might have closed your longest credit line. So be wary of that. If you get upset with a credit card company, don't necessarily go out there and close that line.
Right.
Voice your opinion, tell who you need to tell, but be mindful of is that the first credit card you might have had?
Mm.
Macy's was one of my first ones, or back then, what was it, May Company? Or
So like,
but I keep that mug going.
Right.
I might go out there just to buy a tie, but I'm going to
Just
make
keep
sure
it-
that
keep it
line is
alive,
open.
keep it alive.
Yeah, you know,
Yeah.
you get to once you get to that 800 and that 850 mark, that sweet spot, you're very protective of it.
Yeah.
So yeah, there's those things that we want to make sure that you're aware of, like closing down lines. You want to be wary of that, mindful of it.
Mhm.
And when you close down
Yeah.
lines, so going back to what you said earlier about capacity, if you close lines, that means you have less capacity
Yeah.
because
That's
you could,
true.
let's just hypothetically for round numbers say all your credit cards added up give you $10,000 in credit. Well, if you close one of them, that 10,000 now goes to whatever.
Say 8,000 if you took off 2,000.
So
Yeah.
So then that means you've got to be even more mindful of how much you keep on your credit cards.
Yeah.
And if you can't pay off your credit cards month to month, you got to be smart about what you're doing with that credit
Yeah.
card. You don't want to overextend, use it every month and not being able to pay that off.
Right.
Because not only are you impacting your credit score, now you're paying finance charges and costing you more money in the long run as well. So
Right.
And Lucas, Tim brings up a good point that most people don't really think of. I often go into the high schools and I say, if you had $1, how effective is your dollar working for you? Is your dollar working at 80%? Is it working at 30%?
Wow.
And that's where we get into those interest charges and finance charges. The way I was able to develop good credit is I thought of credit cards as 30-day loans. I don't let them go over 30 days because traditionally, if you can keep it within that 30, you're not going to pay interest on it.
Right.
But what I am benefiting from is the reward. So anybody that knows me know I got family in Georgia, Atlanta, Georgia. So I need to get out there very often. Well, I keep a Delta card. I put my charges on there to get the flight benefits.
Right.
But guess what? They don't get more than 30 days on me because I'm not going to pay interest on that money. So I pay it off before it gets that finance charge.
Yeah.
So that's
Your dollar is going beyond a dollar.
Now your money's
Your
working
dollar's
for
making
you.
money,
You see what I'm
man.
saying?
Right.
That's what
good
you try to
stuff.
do. You want your money working for you
Yeah.
instead of you working for your money.
Love that.
And that's the goal. So when we talk about credit cards, you almost want to consider them as 30-day loans because if you can pay them off before it gets to interest, you're really doing yourself justice.
Love that. Love that. I have a question about timing when it comes to credit scores.
Yeah.
So your credit score goes up or down, right? How quickly? How quickly can you turn it around? And I don't know what that is. If that's like, I got some money, a bunch of money, and I can just pay off a bunch of stuff. And how quickly could that change it? And if you're looking at if you're a creditor potentially, and you're looking at a credit score, and someone's credit score just went from 500 to 700 or something, I don't know, something, whatever. Are you not looking and saying, wait a minute, yesterday you were at 500? I mean, like, are they looking at the history of that rather than just the total score right now? Like, oh, good, you're at 750 now. I mean, what's that like for somebody who's like, oh, I got it there, I'm good? Because I know I have seen it where, like, buying a house. I remember when I went to buy a house, they were like, well, if you can get it here, and even like you can buy points or something, but they were like, if you can get it here in this next month before you buy the house, your interest rate can come down here. And we're like, cool. And they were like, all you gotta do is get it here right now and it'll matter. But I'm like, is that always the case that if you get it there right now, things change? Or is it more like nuance sometime? I don't know. So
great question. There's a couple ways to look at that. A lot of times when you're looking at rate, especially when you're speaking about the mortgages, a lot of times what people will do is sometimes, especially if you've been watching TikTok or you're on social media platforms, they'll tell you, just get on as an authorized user to someone that has great credit. And that, in a sense, will help your score go up. But underwriters are very familiar with that to a point. If that's all you have as far as good credit, they're going to understand.
You don't really.
This ain't a real true.
It's kind of like a co-signed
he's
weird.
Just on the coattail of everybody else. But as far as interest rates for purposes, that might be a way to boost your score. So you and your wife might have been trying to buy the home and you wanted a better rate. So you might say, all right, well, you know, let's see if we can improve that score by whatever the margin was. But a lot of times what I see, and Tim can agree to this or chime in if not, it takes about 90 days for you to start to see a difference. Now, things are changing because it seems like with the credit monitoring system, things are happening a lot quicker. But it normally takes a full 90 days for you to see a full change to all the bureaus. So TransUnion, Experian, Equifax. I don't know if you've seen different, Tim, but
I guess I don't often pull a lot of credit, so I'm not looking at trends and stuff. But generally 90 days is the principles that I've been taught and understand. But there's so many variables that go into each individual's. I mean, if you go from having $20,000 of credit card debt to $0 overnight because you consolidated that into a closed end loan where you have a start date and an end date, then that gets paid off. So you've consolidated. In theory, you could expect that credit score to recover pretty quickly, again, within that 90 days. But if it's taking you a long time to get out of debt, then you're not really going to be seeing a lot of impact in a short amount of time. But on the flip side of that, if you're going out and getting a Kohl's card and a Old Navy card and all these different credit cards, and then you're racking up debt, you could go from a 750 to a 650 really quickly if you start being irresponsible with those monies. Again, it's very similar to school. The couple bad marks on your credit or on your credit report, similar to your report card, are going to impact you a lot more negatively more quickly than the positive marks.
Right.
But yeah, generally 90 days to 6 months is about the time to really start seeing a big differences if you're focused on making changes, especially positive changes to that credit report.
Okay. So then why I noticed a great addition to my CSE app, which is similar to something that a lot of people may be familiar with, like a Credit Karma or some other banks have some other monitoring, or they may have Experian or some of those have these credit monitoring things now that we didn't have before. Once upon a time, maybe you go for a car loan and I think they're required to send you something if you're denied or something. I don't know. And they send you something in the mail, or you can ask once a year for a credit report. I think it was. I don't know, over the years, things
Both
like
of
that.
those are true.
Okay. I'm like, I think I've run into all of that over the years, right? But now one of the first things for me was Credit Karma. And I was like, wow, I can see this right now. And sometimes I loved it. And then there were times where we went through a pandemic. I was like, oh, this is crazy. Like, I hate this thing. Like, what is happening? Stuff is happening. But this is stupid. Then other times you feel good. You're like, ooh, this is nice. You're feeling, and it's really a wild ride sometimes. Because it was like, there were times I'm like, I'm feeling really good. And then I looked down, I'm like, what happened? Oh, wait, what? I didn't even know. Man, it's some old thing. Somebody filed this. I don't even know if this is real. And you're like, anyway, it's just a little much. But now I noticed this on my CSE app. And I really first thought, to be honest with you, was, do I want to see this all the time? Because sometimes when it's something that I don't know what it is or what caused it, one way or the other, I'm like thinking about it one way or the other. And does that make me want to do something one way or the other? I'm like, oh, it's better. Do I now want to make a move and get a new car or do something, or go down? And then it's like, wait, why? Did I know? Wait, what happened? Did something go wrong or something? Anyway, but I do think it's nice that we are aware now and we can see these things and they're in front of us. But if it takes 90 days or so, potentially, why put it in front of people? Why do you think it's important for people to monitor their credit?
So I'm going to let Tim at least speak to what we've added, because we're very excited about that at CSC.
Yeah, so we've added, it's a function called Credit Score, and it's powered by a company called Savvy Money. And it's all about awareness. And to your point, it could be a blessing and it could be a curse, and it could be a combination of the two. But consumers are naturally curious anyways, especially about money and especially about credit. And as places like Credit Karma or other financial institutions have introduced the ability to get on-demand credit information, it's been a game changer. People are a lot more cognizant,
absolutely,
and a lot of those tools do have a lot of educational resources built into them.
They do.
So we introduced this credit score feature where you can log into your online banking and view your credit score. You can also do a lot more with this tool. It's more than just see your credit score. You can see your credit report. You can see your payment history. You see all of the factors that go into that credit score, both good.
I got to push a few more buttons.
I
didn't know I did all that.
So there's alerts. You can be alerted when your credit is run. So if it's you out buying a new car and all of a sudden here's an alert because somebody pulled my credit. Okay, well, I know what that is. On the flip side, if somebody else is out there trying to pull your credit report and you don't know, well, what is this? This, I don't want to throw any names around, but what is this credit card that was just opened or this inquiry that just happened? I don't know what that was. So now you can be a little bit more on alert to watch for those things or put real-time credit monitoring alerts on. So you get text messages or emails, stuff like that.
Awesome.
You can also, to your point, see a lot of those factors. If you do see a major swing high or low, well, what was that? And it'll break it down. I don't know that we touched all 5 of the main impact points of credit. So payment history we talked about, capacity or your available credit we talked about, length of credit, mix of credit,
and the new basically making sure you're not out there opening a credit card. Inquiries. Yeah.
So it'll rate you on a red light, green light, yellow light, good, bad, better, best, whatever. And it'll say this is positively or negative impacting your score. And then it'll say, if it's negative, maybe try this and it'll help you. Or if it's good, then keep that up. Great work. You're doing awesome. There's also the ability to set goals or even do what they call a credit score simulator. So let's say you've got $10,000 in credit card debt. You can go into the simulator and say, hey, if I reduce this by half, so if I go from $10,000 to $5,000, what does that do to my score? And it'll say, again, it's all hypothetical, since there's a lot of factors that go into that, but maybe you'll jump from a 620 to a 710 or something else, whatever that is. But it allows you to just be aware and to exactly what Justin was talking about, make smart, wise money decisions so that you know, is this a good move for me financially or is this a bad move? Is this going to be affordable for me or is this not? And the other cool feature is generally at the credit union, we believe that we're very competitive when it comes to our loan pricing. And credit score doesn't determine whether you're approved or denied, especially at the credit union for a loan application or inquiry. What it does is says, hey, we're going to approve you. Your credit score being X tells us that you're going to pay this percentage. So we use credit score as our pricing model, if you will. So the credit score tool will say, hey, Lucas, we see that you've got a car loan for $20,000 at another institution. Based off of the math, and people that are smarter than us can figure out, okay, if your balance is this and your terms that and your payments this, then that means you're paying 12% in interest. So they can do those calculations and know exactly what you're paying and what you agreed to. Then it can compare your existing auto loan somewhere else and say, at the credit union, we might be able to charge you only
That's
6%.
Really cool.
So you could save $200 a month or $6,000 over the life of this loan. Do you want to take advantage of that? You don't have to. That's certainly up to you. But if you're like, hey, I could use another $200 a month in my budget, try to take advantage of that offer and apply for a car loan through the credit union. So it gives you the ability to paint a better picture for your finances. Again, not that every loan that you have is bad or we can do better. But it's going to highlight the ones that, hey, maybe you're paying too much here. And based off your credit score, our rates per this credit score, we can save you X or maybe save you Y, something like that. So I know you want to talk more about
I'm going to run mine because I have my car loan through you guys. And if I find out you can do better than what you did a few years ago, I'm coming back. That's cool though. That's a great tool. And the depth of the tool, I think, speaks to more than just hey, there's a new number on your app. You have your accounts and now you have another new number, but we have a real tool here that can help you do, because to be honest, with some of the other tools, I didn't even know if I always trusted them because they were very salesy. There's a lot of, it was all this, you're approved for this, and they were texting me and calling me. I'm just like, they're just trying to sell me a bunch of junk. This really has nothing to do with, yes, it has some functionality, but I was very leery of it, to be honest, because I could see what they were doing in the background. And I'm like, are they really trying to help me? Or are they really just trying to sell me something? So even the simulations, I think they had some of those options to run some of that stuff. I was always like, I'm not so sure that any of this stuff is real because it feels like a lot of this is around them trying to sign me up for anybody who will likely approve me for any type of credit card at some point. I was like, I don't know.
Yeah, and not to speak poorly of Credit Karma because it's a great tool, and that was kind of the catalyst for a lot of these other tools similar to what we now offer.
Yeah.
But you're right, they are out there selling your information to the larger financial institutions who are trying to then, in some cases, save you money, but also make a buck.
Yeah.
And for us, this is a service that the credit union pays for to be able to offer to members. So we don't, I mean, we can make money off of it if we can save you money, and then subsequently you bring business from another financial institution to our credit union.
Sure.
But it's a service that we're paying to provide you so that you've got the better picture of your finances without always
great.
getting those sales pitches from the big financial institutions, because we want to protect you from some of those bad loans that might be out there from other creditors.
You know, with all that being said, our main goal, especially when bringing on the Savvy Money, is just awareness, like we talked about earlier. Good personal finances start with being aware and then empowering yourself with the knowledge. Just do better. And once you get to that good score, it doesn't stop there. One thing about finances, I hate to tell you, it never stops. Every month you have to sit there and you got to put that pen to paper or that Excel sheet, and you got to sustain that credit worthiness. So when we talk about sustaining a good credit score, one thing that I often tell people that they don't think about is automate that payment. At least for the minimum payment, it should be automated, right? Once your budget's in place and you got your cash flow right, your payments that are reflective on your credit score should be automated. That way you never get a late fee, right? And then your choice to pay more is always going to be your choice, but never miss a payment. That's the first
and foremost.
So make sure you automate those payments. If you haven't done it, stop what you're doing now.
Stop what you're doing.
You put Netflix on the automate.
That is
you put
true.
everything else on the
That is
automate.
deep.
Make sure your credit score is automated so you don't miss a payment. And then you really want to work on those balances. So when I talk about budgeting, a lot of budgeting is just knowing what I call your adult allowance. So we got an adult report card. Now you got an adult allowance, right?
Yeah.
So you got to see what's coming in. You got to see what's going out, and what's left over. That's your allowance. But then you got to see, okay, do I need that allowance to pay off these balances? So you got to understand your cash flow. So once you get those two things in place, now you're starting to do what it was meant to do. You're balancing, you're juggling. You may have to take from one spot to move to this spot. Once you get savvy with that credit score, then you may be looking at a lot of times when we're talking about debt repayment, people, hitting financial hardships. Oh my God, I got this credit card. It's 20-something% interest. It's $5,000 on there. But wait a minute. CSE is offering a balance transfer for what? 3%? 3% is better than 20%. Well, now I'm really starting to make my money work for me. What? They're giving me 12 months to pay it off with 0% interest being charged. Now I can take that balance, pay it off over 12 months. And the beautiful thing about credit unions, at least our credit union, is we don't backdate that interest. A lot of credit card companies, if you don't pay it off by that date, they're not only charging you the interest on that balance, but the balance you had that originated.
Yes.
So those are the type of things that we're trying to encourage people to give themselves the type of knowledge to empower themselves to do better with their finances.
Love it.
So, with that being said, you just want to be vigilant of your credit. That's why we've added the Savvy Money. And if you need to know more, feel free to go to our CSE website. We have more information there. You can speak to one of our financial counselors. Check it out on the podcast.
Yes.
On Lucas Live.
Listen to the podcast.
We'll have information everywhere, and there's going to be more to come. But we want to empower our community to just be financially stable so that they can go out there and live their dreams. So, if you want to be an entrepreneur, if you want to have own your first home, create that legacy. So, look out for more. Go to a website, go to the podcast. I'm sure you'll be able to find the information.
I love it. Justin, Tim, another great episode. So much fun, so much great information. Everybody out there listening, watching, we hope you guys learned something new, whether this is something you had information about in the past, or whether this is something you're learning for the first time, or whether this is something you're, brushing up on. We don't want people to be intimidated by credit. It's credibility. It's being trustworthy. It's showing people that you are worthy of something that you should be worthy of. We all want to live the American dream. And if you've fallen short in the past, doesn't mean you can't recover.
Yeah.
And there's tools out here like what you guys have now here at CSE that not only show you your score, but show you how you can improve it. And everybody has a chance to improve it. I love your tip about being proactive.
Yeah.
I think that's one of the best things you could tell anybody. Don't be afraid to call, to ask for help, to look at ways that you can get out of that hole. Because at the end of the day, they don't want you to not be able to pay them. So certainly it benefits them to figure out some way to work with you in order to be able to get out of that hole and have a chance to get things together. So thank you guys so much.
Thank you.
Thank you.
For the great information.
Appreciate it.
All right.
We'll be back with more.
Back with more. See you guys next time.